Forget the messy indicators. Today, I'm going to show you blueprint pro traders use to catch big moves in the market. This is how the bank trade, and I'm about to show you everything I have learned over the years. Stay with me in this video till the end. I promise this will change the way you trade forever. And by the end of this video, I will give you a free gift that will help you stack consistent profit using price action. Hello people, welcome back to Finspoke channel, where we decode trading, money and mindset for everyday people. And if you want to win financially, you are in the right place. Support this channel by hitting the subscribe button, click the notification bell so you get notified anytime I publish a valuable content like this, and give this video a like. Let's dive in. Come with your diary, pay attention. These are the 7 things I want to share with you in this video. Number 1, key price action strategies. 2, high probability entries. 3, rock solid risk management. Number 4, real chart example. I'm going to show you charts, so we identify what we are talking about here. And number 5, I'm going to share with you time frame adaptation. 6, pitfalls and the psychology. And the number 7, advanced strategy, that is the signal stacking. Let's get into it. Number 1, key price action strategy. Now, when trading price action, when you open your chart, the first thing to do is to mark your trend or identify the direction of the market. The next thing is to mark your key zones. When you mark your key zones, look for pin bars or rejection candles. A long wick rejected at the key level. That is the market telling you something. Now, pin bars are best around support and resistance zones. That is why I say mark your zones, if you understand what I mean by zones. Now, you want to trade this. Enter at the break of the pin bars, high or low, and set your stop loss beyond the wick. Next is engulfing patterns or momentum shift. A bullish engulfing candle after a downtrend is telling you that buyers have stepped into the market. Now, for strong confirmation, check it on a higher time frame. That's your reversal signal. Now, when you want to enter this trade, place your stop loss below the engulfing candle and target the next swing high. Next is the inside bars or breakout building. Now, an inside bar means the market is cooling off, or more or less consolidation or invalidating. Now, expect an explosive move after this. I will still show you when we get to number 4. Now, if you want to trade it, trade the break of the inside bars. Trade the break of the inside bar range. But first of all, confirm with the market structure. Do your confirmation using the market structure. Now, this works great mostly on the 1 hour and the 4 hour time frame. You can backtest to confirm. Break and retest. Let price break a key level. When the price break a key level, wait. As a trader, wait. Don't chase it. Let it come back and retest and show respect to that particular level. Look for a confirmation like a pin bar or an engulfing candle before jumping into that trade. Next is the support and resistance flip. I hope you understand what I mean. Now, when old support becomes new resistance, or old resistance becomes new support, that is a valid and a power zone. Mark it. Pay attention to it. Price already showed you it respected that level before, and now it's flipping roles. Now, this is not just a random, it's market psychology. Take note of it. Now, what you need to do as a trader is to mark that area. Wait for price to come back and let it respect the flip before you jump in. Now, this is where clean entries happens with tight stop loss and the high risk to reward. There is no magic in this. It's just you having a good knowledge of the market psychology, what the market is doing. If you are enjoying this video, kindly hit that subscribe button, click the notification bell, and give this video a like. Thank you. The second point is high probability entries and the exits. Yes, entering the market and exiting the market is always a problem, especially for beginners. Now, if you are using price actions, let me show you what you should look out for. You need to have a checklist as a price action trader. Now, one of the things you look out for is price touching a key zone. Price touches a key zone, you see a pin bar or an engulfing candle. Now, there is a clean break and retest, not just break, a break and retest. Now, confirmation across at least 2 time frames. That is for your entry before you look for entry for that market. Then for your exit, you need to exit like a pro. You don't need to guess your exit. Now, target the next support or resistance level. Trail your stop loss using swing highs or low. Now, stick to minimum 1:2 or 1:3 risk to reward. Stick to it. That is what keeps you long enough in the industry if you stay consistent. Like I do say, you don't need to take the whole move. Consistency is the key, and that is what keeps you going. Now, the third point is rock solid risk management. That is position size rule. Risk 1 to 2% of your account size per trade. Use a lot size calculator or fixed dollar risk. This will keep you in the game. It will keep you in the game for a very long time because you need to know what you are risking. And do not risk anything above 1 or 2% of your account size per trade. Now, don't slap your stop loss anywhere. Put it below or above structure or the candle wick. Anything outside this is gambling. Take note. Your risk to reward ratio should be at least 1:2. Anything less than 1:2, please skip that trade. Even a high win rate won't save you if your risk to reward is trash. I hope you understand what I mean. You get a sniper entry, but your risk to reward is nothing. It won't save you. Your risk to reward should be at least minimum 1:2. Now let's look at the chart example. I don't want this video to be too long, but I'm going to just use a Euro USD for this illustration. All right, here we are in a chart. This is Euro USD. I like trading this pair because beginners friendly, and you will always see setup. If you don't see setup in the London session, you will definitely see setup in the New York session. All right, this is at 4-hour time frame, so you can see the trend line. I talked about a connection of the trend line. This I'm not teaching, but I just want to explain something. I'm not teaching. These lines you are seeing are zones I marked. There's a way I mark my zone. I do what resonates with me. So when I want to teach, I teach so that you pick the lessons that and do what resonates with you. So these lines are actually zones that I marked earlier because I took a trade here and I took another one here. So that's it. So this is the trend line. And if you look carefully here, you will see the pin bar that I'm talking about. The moment this pin bar came up, this is a retest. This is a retest before it pushed up and it came down. again, I will still go back to the 30 minutes because I didn't take this trade at 4 hours. I took it at 30 minutes time frame. I saw the trade. I didn't pick the trade here. There was a zone. It flipped a zone. It flipped a zone here. So when I saw it coming down, I waited. I waited to get this pin that you are, this indecision candle, this doji candle that you are seeing here. I waited to get it, and this is the retest. I hope you can see this is the retest of it. I put this trend line. If you understand how trend line works, you know that we have inside trend line and continuation trend line. You don't put trend line at the higher time frame and you say that that is the end. No, even at 5 minutes, at 1 minute, sometimes if I want to get confirmation at 1 minute, I still put my own trend line if I don't see chart pattern. If I don't see chart pattern for my confirmation, I use trend line. So that's how I do my own trading. But I trade more of this price action. This trade, the trade flipped a zone here. There is a zone here which this trade flipped. It flipped a zone here, here. So the flipped zone was, this flipped zone was actually the trade I took here, because I know that it will come back to respect this zone. That was what it did. That was why I put this trend line. It came back to respect this zone that it flipped here. So when I saw it coming down, I have to wait for my confluence to be met. And it came here, drop a pin, pushed up, hit this trend line, came back again, drop a pin. Like these things is doing is invalidation. It's trying to invalidate. So when it gets to this place, give us this doji candle again, and it came to break this trend line. When it broke the trend line, came back, pushed up, and came back to retest the trend line with a pin bar. That was how I was able to get this move. Even though I didn't write the trade much, but I was able to get some things and now get out of the market. So you need to get a pure confirmation. You need to see it and confirm it. Now you will say that I put a trend line down. You must understand trend line and the use of trend line before you use it for confirmation. I use this as a confirmation. I put my trend line here. Let the trade break the trend line, come back to retest, then I know that it is respecting that zone that is flipped. That was the scenario here. Now, after that, I get out of the trade, waited, and now saw another opportunity here. The trade getting to this zone. There was a rejection. So the price was rejected here. The price was rejected here with another indecision candle. Look at it. With this engulfing candle coming down, showing that the momentum has left the buy, is now shifting to the sale, to the sellers. So I have to wait for this trade and came here, give me a sign. If you don't really understand this, you will say that this market is pushing up again. But then the market has to do some corrections before it will definitely go up. So because I already know what transpired here or understand what transpired here, I was waiting patiently to see where I will get it. Initially, when I don't understand things like this, because I don't normally trade this double top. This is double top if you understand your chart pattern very well. Initially, when I see something like this, I'll jump into the trade. But later on, I come to discover that when it forms something like this, it will range a little bit, it will cool off a little bit before you see the big move like this. So I had to wait patiently until I saw this, it now pushed up, now give me the pin buy again to confirm that it is now ready to go down. It already give this. This was actually an aggressive entry, though I've analyzed the trade. So it was actually at aggressive entry that I got the trade here. So I have to write it down to this point. Wasn't really sure if it's gonna move down as expected, but I have to cut it, take what I want to take, and move out of the market. So I will encourage you to sit down, rewatch this video, get these pin bars, these indecision candles, look for them, see how they react, market reacts around them. In the key zones, not anywhere, on the key zones or key levels. That's the when we say key zones or key levels, that's the support and the resistance levels. How they react, price react around them, around that zones. Once it gives us this sign, you will be able to understand it better. Watching this video just once will not give you, you won't learn, really understand what we are talking about. So try and on your own and back test this. When you do the back testing, you will understand this chart better and you will appreciate this video. Let's continue. Point number 5, that's time frame adaptation. We have scalpers, we have day trader, and we have swing traders. So these different types of trades, they have different time frames that they work. As a scalper who is spending minimum time in the market, focus on those micro support and resistance zones where price keep reacting. Look for clean tray candle setups like an engulfing candle, a pin bar, or a strong structure level. Now, that's your high probability sniper shot. Don't overthink it because the time is just too small. Now, get in, grab your pips, and get out smiling. Don't go and be wasting time because what you are doing is scalping. Let me ask you this question. Are you gaining value in this video? Please hit that subscribe button. Click the icon bell beside it and give this video a like. Drop a comment in the comment section and also share it with your friends. All right. As a day trader who needs to spend little hours in the market, you need to be active during the London and the New York sessions because that is where the juice is and that is where the volume kicks in. Look for clean setups, engulfing candles, pin bars, break and retest, and you will catch some powerful intraday moves. Keep it simple and follow the flow. I like keeping it simple. When you keep it simple, you don't get confused. So keep it stupid simple and follow the flow. We have the swing trader. These are for patient traders, people who are patient in the market. Now, you are not here for the noise at the lower time frame. So you are here for a big move. You need to trade in line with the higher time frame structure. Yes, that's how you stay consistent and win long term. Whatever I've said here is applicable both in the lower time frame and in the higher time frame. Your job is to understand how it works. Then point number 6, pitfalls and psychology. Now, for you to be a profitable trader, you need to be disciplined. There's no two ways about it. It's not magic. You need to avoid these common mistakes. Don't fall for these traps. That is the trap of over trading junk setups. Don't fall for it. Don't fall for moving your stop loss emotionally. You place a trade and the trade is about to hit your stop loss because you keep assuming or you keep anticipating that market will go your direction. You keep adjusting your stop loss. Once it's a bad trade, it's a bad trade. Close it and get out. Don't fall into this trap of ignoring market context, trading choppy markets when you don't know when to step out of the market, when the market is choppy. It is messing up your money. Understand how these things are, how it works when the market is ranging, when it's consolidating, when it's choppy. You don't need to be there. Get out and wait patiently for a big move. You catch it. Patience is key. Knowledge is powerful. Your discipline tips. You need to have a checklist. I mentioned it earlier, and stick to that, your checklist. Journal every trade. Yes. Whether you made profit in that trade, journal it. Whether you sustain loss, journal it. These are lessons that you are learning in the market. And remember that the market owes you nothing, absolutely nothing. So show up like a pro, or you get humbled by the losses you sustain. But you see, in this industry, I wish you win blues all the time. It is possible to stay consistently profitable in this industry. And if you are gaining value in this video, don't forget to subscribe, to drop a comment, and to like this video. Then the seventh point is advanced strategy. Yes. Now, this is what I call signal stacking. It's a combination of the things that you need to see, get them aligned for you to get A plus setup. And when you get A plus setup, stack it, and the right day trade is always sweet. Now, what are you looking for here? You need to get a breakout. Price pulls back for a retest, then gives you a strong pin bar. That's an A plus setup. Now, what this means is that you have a structure, a confirmation, and a momentum, all of them lined up. Multiple signals or multiple confluences. It means less risk and more confidence when you want to trade. No need to chase the trade. Allow it come to you. That is why I say the first thing I say is mark your zone. When you mark your zone, flow with the market. Allow the market come to you. When it comes to you, it will serve you. It will give you what you want. But if you chase the market will mess up with your psychology. It will mess you up and take from you. Get to that zone. Identify that key zone. Get to it. Sit tight. Wait for it. Look for your confluences or your checklist. Once is met, write the trade. I hope this video helps. Don't forget to share this video. Subscribe, like, and drop your comments. I will see you in my next video.